disclosures on the screen so I can get into the midday call. Midday call for those of you who would like to watch it. I didn't do a video this morning just because had a lot going on and basically just had to do everything for RAA. RAA gets a morning video live every morning before the open, as well as a full morning note, as well as 14 to 20 charts, and then I try and update the Twitter as it's happening. But anyway, I'm waiting for the link so this way I could post it. So this way everybody knows it's there so they could watch it live. Catherine, did you post it? Okay. Let's see if I could see it. Hold on one more second. While you're looking at that, you could also look at this, t3live.com/RAA for those of you who do not know it. That is my paid feed. Okay, so here we go. I'm going to tweet this right now. Thanks for bearing with me. Live. You guys will see it come up live. Not love. Live. Don't you love spell correct? Midday call and education. I educate as I do this. Okay. So that's that. Let's get to it. Let's go back to disclosure. And then now let's go to the chart. So my name is Scott Rudler, Chief Strategic Officer at T3Live.com. I'm doing a little midday public call because I didn't get to do a quick video this morning. I was running a little late and I had a lot going on. All right, so today's another strong day. I would say probably took didn't take some, but I think traders like myself would have probably rathered a down open today. Why would I want a down open when I have 12 to 13 longs? Because, some tech names faded. I did sell some things yesterday, so I wanted to be cute and buy them back cheaper. A lot of names closed on the actual kind of lows yesterday, so I didn't take them out short, but some guys probably took a few of them out short, but thank goodness they wound up going red, so you could have traded around them. So either which way, at least things are making sense. A lot of names are having follow through with all different kinds of tactics. If you look here at the chart of just say the S&P cash, just again for educational purposes, everyone's like, Red Dog, when do you get in portfolio approach? What does that mean? Well, right here, back in October, I've pretty much been in portfolio approach this entire time. Why? Because we've been above the AIM 21-day pretty much the entire time. I've had anyone went from 4 names to 25 plus names and options with the hedge, depending on where we are versus the 8-day. There's been 2 spots where I reduced and went from like 20, 25 longs to like 5 or 6 to see if the bears had any power in order to change the trend, right? We had the Iranian crisis, which what happened there. We killed the guy and now they haven't said a word. But anyway, obviously the coronavirus start of the news flow could have been a situation where we corrected more, but both proved to be, sellers had no power. What do I mean? Well, here, this was your first, sequence. I call this an active sequence. It was an active sequence above the 8-day this entire time. On this bar right here, okay, where it took out this range, I definitely probably went to a third of my positions, came in, all of a sudden snapped back, and then regrouped above the 8-day right here, below 31.54, and that's when strong names outperform because usually the leaders show relative strength before it actually takes out the S&P area, and then it took this out, and then you had another active sequence from December all the way up until this day. And yes, on this day, I do remember that day. I wound up losing a decent amount of money because I had a lot of positions on this. It was hard to see this coming. And anyway, got back down to 7 or 8 positions, came in, was good to sell on. See, when this happens and you sell on this day, you don't feel so bad because you're able to buy some back lower or cover hedges lower, and then you get a bounce to fill that. Then all of a sudden, this was kind of wishy-washy. We weren't sure. Remember, China was going to be closed for the lunar holiday, and everyone was like all scared. And then the next day, nothing happened, as far as our market. So then this was your day to switch gears again. This was the day that said, hey, we're now back above the AIM 21-day. If you had, 20 positions here, and then you're down to 5 positions here, maybe you're up to 6 or 7, you're looking for leaders, and lo and behold, we've been up this entire time with a nice little Red Dog reversal to start the week on Monday. So with that being said, those are my thoughts are as far as the trend using the AIM 21-day and a portfolio approach versus a tactical approach. One of these days, we'll have a wide range bar day to take notice, and the bounce back will be very feeble. Nothing will go higher. We'll build a bear flag, and then we'll continue lower. One day, it hasn't happened yet, at least since this right here. So anyway, let's go over some positions and some stuff. So, a lot of you guys were following me, for my Amazon scenario. And like Amazon yesterday, I did sell my 2170 after 140 points of gains besides all the options. So that was a kind of thing I would have loved if it opened lower, because I could have been a buyer. Instead, I didn't even touch Amazon today. First day I didn't touch Amazon in I don't even know how many days. This was your gap up above the big range, which I'm not going to get into. I was long the stock. I think I added on this Red Dog reversal. Might have even added through this 2070. Sold some, held, added again here, sold some, and then yesterday I was small, and then I sold the rest. Okay, this little topping tail could have meant to move back down to the 8-day, or not. Instead, you have an inside day where now we'll see, let it hover here for a few sessions, let the moving averages catch up, and then, hey, maybe this 2185 will be buyable if we could stay there for a few days. So I'm in a call spread still, meaning I own the 2100 calls, and I sold the 2170s for like $19. So I'm still synthetically long Amazon up until about 2189. So I just would rather, to have this stock, I'd rather wait for a little bit of a better setup, not 1, 2, 3, 4 days up away from the 8-day to sit in it. I sat in it in here, which I took enough banter. But anyway, we'll see. So that needs to kind of rebuild. I am still in Netflix. Netflix, to me, has a compelling situation in front of it. Does it take out the channel? It's going to need some kind of catalyst. It can't just go up like a few bucks and it needs like big volume. It needs something exciting. I don't know what it's going to be. Maybe they up their international subscriber numbers out of nowhere. Maybe they up their fees. I don't know. But all I know is that Netflix itself has been really good, and I've been long it since here. Okay, this was post earnings. Okay, it came in. I didn't even look at it. I was like, Netflix is not going to be so great. And then PS on this wide range bar, I'm like, ooh, that's interesting. They just woke up Netflix. And I got back long in here. So I've been long Netflix since here, around 345. I think I was able to add on this little bull flag breakout. Sold some, and then I've been holding it. Today, I actually, like a little momentum monkey that I am, I did buy some 380s today. And I was already long, so that's why if you buy strength and there's no volume, you could ruin your average cost a little bit. So, my active account, I'm probably down a little bit, even though it's up. But what's really exciting to me, which it might not happen here, is this long-term chart. Look at this 2-year chart. For 2 damn years or more, it's been going sideways while everyone's been talking about all the competition from the streaming wars, from Disney Plus, this, that, boom, bam. Anyway, this 385 is huge. Gets through this 385 on some kind of major catalyst, this thing's going to be up to 420 very fast. That is why I have a call spread on, just in case also it happens overnight or it happens in a way that is not conducive to my style. So I have that 380, 400 call spread, but I put that on here, and it cost me $3 to make 17. So I was like, all right, that's a great risk reward just in case it trades poorly and I'm not in the stock and I could sit in the options, and I have it for 221. So I have not till this Friday, the next Friday. I don't know if that's enough time. You know what? It could come up to here and then all of a sudden, come back in again. That's what these channels do. But at some point, I do think it's been in here for a long time. Something's going to get it going. So I am in that. There's no earning, already had earnings. There's nothing on no binary event, so it's something that's got to happen. I don't know why every day someone is telling me, oh, Red Dog, more 400 sweepers, more 400 sweepers, meaning guys are buying 400 options for that 21st. I bought the 380s and sold the 400s, even though if it gets through there, but I'll be trading it also. 420 is quite right there. But anyway, that's that. So yesterday Microsoft was very weak. So some guys went out short this morning, like, oh my God, I went out short Microsoft. It was a bearish engulfing bar yesterday. I'm like, well, you could probably short into, 187.50. That was the resistance I went over in the morning call with Weatherall Access. I'm like, just be careful. But literally within 5 minutes, it went red and went down $2. So at least that gave you a way out. That's what traders need. You need follow through. If something goes out really weak, you'd expect the next day, if it opens up with the futures are up 13, that sellers would return instead of just holding it there and trapping the sellers. So Microsoft wound up giving another day to the downside, which was nice for everybody. And it also, if you got out of it when it basically, didn't hold this 188.84, you didn't feel so bad about yourself because it opened lower and you could have bought the 8-day. Hey, look at that. Microsoft held the 8-day. What a coinky dink. So I did tell Brother All Access if you went short overnight and you added to it, cover 182s. So anyway, that was decent advice, even though I didn't do it. Okay, this was the area that how high did it get? It didn't even get to 186, 187. You could look at the 1 day and see right away. This morning it opened up, didn't get to this. It was the resistance that I kind of outlined, saying hey, if it gets up to here, I would think to short, or you short a 5 minute. So okay, listen, let me go over what I mean by a 5 minute high. So, in regular All Access today at it's 11:49 now. Let's go to the videotape, which is right here. This is regular All Access. This is my private Twitter. While I get it up, you could look. This is how you could get it for the month if you want it, and you're a little lost and you're not having a good January, or you didn't have a good fourth quarter last year, which was tremendous. All right, let me see. So let's get to Microsoft. Okay, so let's go back. So not fade out. Let's go to charts. All right, so can you read this? Wait, hold on. This is the tweet that I send out every morning with the chart of Microsoft. That's regular All Access. Anyway, so I'll read it to you. So Microsoft got this was at what time? 8:36. Microsoft got super extended into yesterday's open. Okay, so let's go back to that for a second. Let's not go back to that. It was away from the 8-day. It grinded lower all day and hit 183.50. Some might be short for more downside follow through. I might fade this versus a 5, 15, 30 minute high. Resistance is like 187-ish. So sometimes I might do it, meaning it's a setup that I think is good enough for me to do. If you're doing it, this is what you should probably be doing. So anyway, this high happened by 9:30. So this one was 9:31. So really, the high happened in the first few minutes. So you could have just anticipated, I guess. And then here, which was 9:43. So this was already after like 10, 15 minutes of data, which sometimes it's better to wait for data. Then once, and this you could have even shorted here versus the high of the morning. And then once it broke this little ascending channel, then you had confirmation and, you made some good money instead of anticipating. Sometimes I anticipate if it gets into a resistance area, and I've been doing this long enough, I'll say I'll short it here, here, and here, versus 187, which it never got to. Or you wait for that high, and then all of a sudden this wide range bar, you're like, wow, look at that wide range bar just engulfed these three little whatever minute candles they are, and then that's your stop, and then pow. So that's that. So Microsoft was a good continuation short from yesterday, even though it was a strong name, but it was that extended from the 8-day. So anyway, that's that. And now it's a different trade again. So this was usually a big wide range bar like this. The reason why I came up with 187, if it's going to have any validity to it, it shouldn't get back above a third of it or half of it. Once it engulfs or takes back half of a prior day's candle, it negates the meaning of it in candlestick land, which is where I like to live. All right, let's go to Apple for a second. Because Apple, I have not been in Apple for a while. Okay, Apple to me has been a little bit trickier. It made its high after earnings, didn't hold this doji spot, came in, didn't buy that, came all the way back up. This was the day I was shorted, covered it. I did not buy into here, into this red dog reversal at 318. But today I did go back long Apple. Okay, it has this has been going on now for over a month. It had great earnings, and I know they shut down a factory in China or a few, and there might be some stores, but it's holding up pretty damn well. And I know if it gets above 327 and I'm not in it, I'll be a little upset with myself. I do have FOMO when Apple goes and I'm not in it. So I am long some Apple here. You could use this as a stop, which is 318.71, or you could use the 8-day, but ultimately this has done nothing in here. Okay, last time I had a really good video set up for you guys for Apple was here post earnings. Remember when, buy versus 245, take this out and go. Well, I've had a bunch of different bull flags since. This one was the one also. You could have bought a red dog reversal, or when it took out this area. This was another nice, I remember this spot very well. That was when you had the imbalance. So everyone was so bearish on this day, but then the imbalance was over and then that happened. But anyway, for me, I am I am long right in here. I'm long today. So we'll see. Does it go? Maybe. Is it overbought right now? No. But it looks pretty good. I'm going to stay with it. And if like I'm going to the gym in like 20 minutes, so if I were to set an intraday stop where all of a sudden Apple gets weak and my trade changes, because a lot of you guys are like, Red Dog, how do you go to the gym intraday? It wouldn't blow your mind. And I'm like, no. Well, if this stays strong, I'll probably make more because I won't sell any. If you wanted to be tight, okay, and use an intraday stop, okay, for this to be strong, well, somebody could use this. Now, this is too tight. You can't really use 323.73 because it could still go below it and still be fine for the day. I would say this is where I'm going to put my stop. The trade changes for the day if it trades back below 322.25. That shouldn't happen. Here, if you're really tight, it can go into here and then go. And then all of a sudden it's strong and it's 2 o'clock. I look, I'm like, oh, Apple's up here. I'm like, wait, why am I out of it? Because I put my stop too tight. I would say you could use this as a stop or even, to be honest, here. But I'll probably use 322.10 as a stop. And now, if this gets through here, it can continue. So anyway, that's Apple. Let me do a few more. So guys like Red Dog, what are you doing with Roku? Because you did a video on it. You were in the call spread from last week. You bought the stock. You're trading around it. I'm like, so let me tell you what I'm doing with this. So, let me get this. Oh, that's no Roku. Go back. Okay. Roku. So, Roku, I really don't, have any idea of what the numbers are going to be. All I know is that this has been consolidating for, August, September, October, November, December, January, 7 months. And, most people have cut the cord and they need the Roku sticks. I have 2 of them. This, descending trend line has been very tough. I actually didn't trade it much in this whole thing because every time I tried to do it, it would be it would be like a failure. Both ways were a failure. To me, that sometimes, it's smart money trying to get people frustrated, get people caught short, and get people out so they don't look at it when it resolves. So here, looked good, failure. Here, looked like it was going to break down, Red Dog reversal. Here, looked like it was going to go, Red Dog reversal, sell sign. Here, looked like it was going to break, upside. And then finally, yesterday it woke up. So right in here, I'm like, you know what? Earnings are next week. I'm going to buy a 140, 150 call spread. The cost is $3. If it's good numbers, I would think it would go to at least 150-ish, which is up here. And, I'll risk 3 to make 7 because you have 140, 150 is $10 is what the intrinsic value is, and you're paying 3, so you can make 7. I'm like, so if I do 20 of them, risk $6,000 to make 14. Not bad. I don't risk more than $3 to $5,000 for options. And then all of a sudden, right around here, on this day, everyone's Red Dog, Roku's waking up. And I was like, holy cow, let me get long the stock just in case it starts a pre-earnings run. So then on this day, I did add through 136. I sold some 140s that I told you. Then I bought some back. And I also did a lotto spread just in case. What's a lotto spread? Well, a lotto spread is if they're really good numbers and the shorts get really squeezed and it tries to go back towards all-time highs, which is 165 to 175, which rarely happens. It's not easy to happen. It's going to need to do blockbuster report, nothing bad in the guidance. And anyway, so for that, the 160, 170 call spread cost me $1 to make 9. Why not, right? Buy 20 of them and you can make 18 grand or lose 2. I like that risk reward, and you don't get a lot of setups like that. So anyway, so I'm still in actually, I don't know if I'm in a little bit of the stock today still. I might have sold above 140 today, but I'd like to see this go sideways, maybe take this out tomorrow. I am still in both call spreads, and just remember, call spreads into earnings usually could be a 0. So whatever you put behind it, you better be sure that you don't care about losing it. Yeah, you lose it, it's a pain in the ass, but it's not a big deal. I've done 10 of these in the past 3 months, and I hate to say it, out of 10, 8 of them have worked perfect. One of them, which was Lyft, kind of worked perfect, where, it did a pre-earnings run, which we'll get into. So Lyft, you guys know, we started buying the stock in here. Had a first move above 50, trimmed some. This move I got out of the stock, but I was in the options here. I bought the 50s for $1.55 into this move lower. Uber was going to happen. I'm like, oh, let me buy some more, 155. And then Uber was good, so I bought the stock. And then into this move, I'm like, I don't hold the stock into earnings. Let me get out of the stock. I got out about 53, got out of the options at 4, and then I had a third left. So I'm thinking yesterday, I'm like, look at this move. From here to here, all I wanted to do is get to 56. That's a big resistance. And there's earnings risk now. So you know what I'll do? I've tweeted out, I'll sell the 55 for $2. So if it's great and it continues, which it's hard to do, the 55s, give me $2. That's 57. So that means my 50s are now worth $7, and I bought them for $1.55. If it's not good and it comes in, those $2 are mine. But then the $5 that those options 50s will probably be whatever. I wound up selling them for 70 cents today. So I took in 2. I sold for 70. So that's 270 actually. So I still made money. Is that 270? Yeah, 270 from $1.55. So I still made money on the last third. Doing it smart, where I'm not just throwing shit against the wall. So now, what do I think about Lyft? I think it needs time. I think it's going to need time. I'll cleaner things out there. Uber was fantastic, and kind of also it's holding around here. It's a little extended, no setup. I had most of it in here. I sold a lot, and just the point I would not be long it. Probably could pull in a little bit, but doesn't mean it's a short. Twitter. Some of you guys are like, what are you doing? What are you doing? Well, I started accumulating it somewhere around 36.5, and I might end up getting my average cost like 36.25. Thinking maybe today would be a red dog reversal, but someone upgraded it, so I bought it into the hole, trimmed some. I still have tier 1. I was up to like a tier 2. It worked. Lost a little yesterday, made all of it back, and then some today. Trying to catch the same thing with pins. Still a little weaker. I had the options. Remember, we did that call spread, worked perfectly. But anyway, we bought it here, sold some at a call spread, maxed it out perfectly, did not touch the stock that day. Then I'm like, oh, look, it was as high as 27 and change. I could be a buyer near 24. So I bought it near 24. I'm still in it. It tried to go green. I'm hoping it does like a red dog reversal somewhere around here. Today's low is now what? This is 23.70. Still lethargic, but we'll see. I'm only in tier 1. I went to tier 2 for a little bit, and when it looked like it was going green, I was buying, went up 15 cents. I trimmed some. So I'm probably tier 1.5. And then if I really see something, I'll go more. And listen, usually I go over a lot more things. If you're interested, like this is kind of like the format of my morning note, and I do it, and it has the video on it at 8:30, so you can watch a pre-market, so you see everything that's happening, and then I do a recap to go over what happened and what I might be looking at the next day. So if you did not have a good January and you didn't have a good fourth quarter in 2019, you better just take the initiative and go to t3live.com/RA and try it for a month. What's wrong with trying it for a month? I don't even know what the cost is. It might be like $55. You spent a lot worse. You probably get an ugly sweater for $55, never wore it again. So if this doesn't work for you, you paid 1 month and then you're done. If you find something that works for you where you could buy yourself a whole new wardrobe and redo your cabinets, then you do it for the year. Anyway, that wasn't a great analogy. I hope you guys are having a good day. And just like I said yesterday, on the stair machine, I know a lot of guys did have a great January and a fantastic fourth quarter, including me. I had made fun here and there about, my wife wants to redo the whole kitchen, and we were making fun of names. I'm like, I needed to go here, and then she can get the quartz countertops. I needed to go here, and she can get the 7-burner, Wolf stove. I just playing around. But, a lot of guys recently have been saying, hey, I'm getting another this car. I'm going to get my vacation home. I'm going to do this. I'm going here. I'm going there. I'm like, guys, this is a long-term career. I've been doing this for 22 years. You're not always going to have great quarters. You can't, just because you had a great fourth quarter doesn't mean you can have a great first quarter. Just because you had a good fourth and first doesn't mean third and fourth are going to be the same. So instead of making your nut bigger and increasing your expense load, pay some things down. Pay for a few extra car payments, maybe pay a few extra mortgage payments, maybe pay something off. So this way, if the market gets tighter or you get in a pain trade or you lose money, because there are good traders that have lost money also, like in Tesla. There's great traders that were having a great fourth quarter, and then they lost a ton because they got caught in the ramp up in Tesla from 700 to 960 and went down a few $100,000, and now have to piece it back and might not get a check for a few months. And I'm sure they would want some money from the prior quarter that paid down some bills instead of getting increased bills. So again, cost average your year and your career and pay things down when things are great versus increasing, your expense load. On that note, have a good rest of the day.